Hello, everyone. First of all, can I just get a sound check? Can you guys hear me loud and clear? Okay, that would be great. Okay, well, give us just a few more seconds, and we'll be with you with all the details, and we'll start talking just in a few minutes until everybody just log in into the system. All right. All right. So, since everybody is still logging in, but I think it would be wise to start our coverage. Welcome, everybody, and today is another day with the FOMC, or the Federal Reserve decision for the month of July. It's the 28th of July, 2021. Let me just switch back real quick to our main screen, and I hope that you guys will be able to see it. Let's see. All right. I think you should be able to see me loud and clear, or to see me to start with. And I'm guessing also the sound is pretty good with everybody. If you have any problems, please just let me know we uh, before we even start. But I'm guessing here the stream is healthy and everything is totally fine. All right, welcome again. But why there's like just a slight delay on my? It's not a slight delay. It is basically some backup noise. I'm not sure where is it coming from. But anyway, since you, let's go ahead and start. I'm just gonna minimize this one a little bit. We don't need to see everything in here, and I can see it right there. All right. So, after a long wait, and we saw a lot of drama over the past few weeks, the day has come finally, and we're waiting for the Federal Reserve today. But the most, why today's decision is very important is because, again, everybody is waiting on the Federal Reserve to give them a new kind of information. And what the kind of information that we're looking for is, of course, the QE program, or whether the Federal Reserve will be able to taper anytime soon, maybe this year, maybe, or at least we're talking about. Everybody's was looking and hoping that the Federal Reserve will be able to taper before the end of this year. But a lot of the data that we saw over the past few weeks, over the past also months, it's kind of like showing some sort of contradicting data. Some some data are positive, some data are negative. Uh, this is why one of the reasons like why the market is kind of like in kind of like a bumpy rides. But at the same time, we saw like multiple or a lot of good data from the earnings season from the US yesterday. Microsoft, we saw Apple, AMD, Tesla, Twitter, Snapchat, like all of these big tech companies. Also, even the banking sector. All of the earnings came in much better than expected, and uh, despite that, um, we saw a lot of like kind of declines, at least for today. If you want to look at Apple, it is actually going down. And to answer your questions before even you ask me about this, why Apple stock would go down despite the fact that all the numbers were perfect. Uh, well, the only or there's two answers to this, or two reasons to this kind of move. First, the market is looking for some sort of excitement, but the most important reason is basically Apple and most of the tech companies decided not to give any kind of forward guidance or estimates for the next quarters. That's why one of the reasons why Apple, most of the tech stocks actually went down. And of course, the profit taken is very good after the bull run that we saw over the past few weeks. Um, this is why we saw that kind of a decline. But what I believe is like this kind of declines is kind of I consider it as discount on the stocks before going and buy it again. Today's stream is going to be only on YouTube and not on Facebook, because we're also testing some sort of like multiple variations about uh, how the stream is going to go from now onwards. So, all right, so that's the most important thing to talk about at the beginning. Again, like the U.S. dollar index, as always. Let's go just have a look at what the currency did over the past few days or the past few weeks. It is still trading within the same tight range. We haven't seen that much of an upside, if that's the right way to put it on. And this Fibonacci is kind of not the right way that we're looking at least for the time being. So let's also take that off. So the US dollar already traded kind of like with the same tight range since maybe I would say since June until today, with and trying to break above the 93, but unfortunately we haven't seen that much so far, and we're still trading within the same area. And I am not with. That's one thing that I was talking about over the past month, that I'm not actually with the idea of buying the dollar at the current area between 92.80 and the 93, because again, like technical indicators were heavily overbought and we're starting to see some sort of a downside retracement. As for today, it might be some sort of black or white decision. All right, and what I mean by that is basically it might be either positive or negative, and it's going to be based on one single thing. Forget about the dot plot because it's already done, and we're not going to be looking at it today. I mean, it's not going to be published today because it only published once every quarter. That's one thing. The other thing, which is the most important thing, is will the Federal Reserve give us any kind of information about when the Fed will be actually tapering? If the Fed was some sort of, I would say, very optimistic and very generous to give us some that kind of information, by then we will be actually buying some dollar. If the Federal Reserve decided not to talk about tapering and stick to the recent or what they said over the past few months or for the past also few weeks, that tapering is still far away and inflation or the current inflation increase is likely to be transitory, that's kind of a thing that I would like to see for the time being, because I need the US dollar to go down a little bit before we load on the dollar on not only short term but also on the medium term. So looking back at the US dollar index here, which is, as I said, like again, like so far, I still believe there might be, and we are kind of in a like bearish technical kind of that from yesterday. Not that big of a technical, but it's kind of like showing some sort of a retracement to the downside, and I believe 92 is highly possible that maybe we will see it over the next few days. But that's one thing that you guys and what we will be focusing on if what the Federal Reserve will give us today. If no new information, I'll be more than happy to keep on selling the US dollar. There's a lot of questions about gold, which is why also we've been talking about it over the past few weeks now. Remember, I don't know if you guys remember this chart, but this is the Fibonacci chart back in June, or also back in June, and this is when we decided to go long on gold on 1770 and 1780. And at the same time, we reached one of the targets that we were talking about, which is 1830. And since then, we've been declining kind of gradually. But now our stop is at 1780 and 1770. So basically, our stop is at the entry. So whatever happens today, I really don't care what's gonna happen with gold. But the same scenario, the Federal Reserve decided to stay or stick within the same idea of that we need to wait for more time to look at the data, or if they just stick with no new information, I believe that gold will be actually above 1850 in the next few weeks. Other than that, I guess as long as gold could continue to trade above 1770s or 1760s, I would still again, that's on the medium term. That's why again, like I was when I bought it, it was 1770s, 1760s, and I'm still looking for another upside in the next few weeks. Other than that, if it goes south against us, I'm not going to be that much of a it's not going to be that much of a big disappointment, kind of, but we'll see what happens. So far, also, if we look at today's Dow Jones, S&P, Nasdaq, it's kind of in mix so far. Dow Jones is down by 125 points. S&P is also down by only just 6 points. Nasdaq is the only one that is still up today. Nasdaq 100 and Nasdaq Composite Index, and I believe the biggest sector today so far, it is not actually Tesla, 644, but Tesla is still looking sexy. All right, let's go into like kind of read some of your questions and what if there's anything. Let's go back to, let's take off currencies, right? And oh, we're not doing currencies right actually, so that would be, I mean, okay. Currency so far 92.50 for the dollar index, and just like I guess this kind of numbers will definitely change right after the decision today. Let's go back to the. Why am I doing it wrong today? Just a second. I'm sorry. I'm just. We don't need that, and we don't need that. And let's go back to the main screen. Yeah, there we go. Okay, sorry about that. So, let's go ahead and let's see. Also, Dow Jones Industrial Average. Yeah. Before that, let's just read some of your questions. What the hell? What happened? Forex news trader. I don't know. I have a big problem. MT4 not working, and I'm trying to update, but deleted for App Store. If someone has a solution to that problem, please help me. You can just speak to the guys like from the support team. They will definitely like give you help, especially that this is kind of like a technical issue. No live stream on Facebook. Nope, it's going to be on YouTube today. And dollar we talked about. Gold and CNH. That's interesting. CNH. There, no, not CHF. CNH. I'm sorry about that. Okay. Well, that is kind of very interesting over the past few days, at least the daily chart. I kind of like the fact that we saw this kind of retracement to the downside. I'd like to see some sort of like another stabilization after this breakout here, because again, we've been trading within this tight range here for how long? Since what? I mean, I would say start from here, from 21st of June, and then we're seeing that breakout. I believe some sort of like anywhere around 648, 49, that would be kind of like, but I really need to see a retracement first, or a stabilization above that resistance or above that support or broken resistance before I actually go into buy. Because I think even if we look at the 15 minutes chart, all right, let's see, where is he? That's kind of, the camera is kind of like covering some of my stuff. But here we go. We saw the first reaction at the 50, and we have another reaction at 61.8. So I guess this is your buying area. Again, I have to look for, on a very, very short term, this is your area to long. That would be dollar CNH. All right. Can you or your team please teach us harmonic patterns? They're used with Elliott waves or fibs, and they're used. Okay, I mean, we'll have to do something. I don't use harmonics that much, to be honest. Most of the time I just use uh, Fibonacci and technical and fundamentals. That's most of the time. But we'll look into that, and we'll try to do like a separate session for that. All right, that's number one. Gold, we already spoke about it. Let's go ahead with the British pound, which actually today, I was hoping it would actually give us the target that we actually sent out during our this is done, but now we'll have to look at it in a different way. So this one, let's take it off first, and let's take off this one. No, not copy it, sorry. Our target's still like a 139, and I'm still hoping that this would be the case today. I have to try find something else to do here. Yeah, 139.10, and that would be first target, and then second target 139.90, but that would be a new selling zone that we're looking at, and it's not only on the short term but also on the medium term. We have 10 minutes left, or less than 10 minutes left. So we bought dollar sterling over like a week and a half ago at 137 when we saw that dump, and you can check also our written reports on FBS website. And so far we're like up over like almost 200 points, but I still need to see some sort of kind of another push all the way to 139 and 139.90, and I would love to short the British pound again 1.40 if we actually go there. And this would mean that today the Fed might actually help us, so let's hope that he does. Gold we already talked about. I'm still waiting on it. Nothing much really to talk about gold. Euro. Here's the euro. The euro is the same thing too. It's been trying to go down multiple times, but it's kind of like showing some sort of a cup here. I'm at least, I mean, we reached yesterday 118.30, which is what we were looking for, at least on the short term. I don't know who's texting. Yeah, so I still believe, I mean, the euro is kind of like showing some sort of another kind of positive, initially, let's say, or initial positive data. So we're already also, we bought it 17.30 just about like last week, and we're still in it so far. So I would be hoping if we get to 18.70 maybe today. Dollar yen, I try to avoid it as much as I can, to be honest. JPY. But let me tell you something before we actually like hit the numbers like in few minutes. About today's trading, I might be trading, we might not. It all depends on what the market comes out or what the market reacts to and what the data will hold for us. Um, as I said, as I always say, it's not about like, oh, once the number comes out, we're gonna, or once the data come out, we will execute trades. No, we will have to wait, see, and wait for a pullback. Read what the Federal Reserve has to say first, and then we will decide what we will do. All right, because again, like last, just like the previous one, we didn't trade anything because the move was just excessive, and I didn't want to just get stuck in any of the positions. So we will definitely do the same thing today and see what we do. As for dollar yen, it's kind of like showing some sort of also another bearish um, pattern on the daily chart, at least after breaking that channel on the daily chart. So I would I would hope like some sort of around like 110, maybe 40, 110.50, and that might be good for a short. But yeah, I think that might be actually possible today. So that's the big time yesterday. Fibonacci. So that's the big dump from yesterday, right? So we saw at the 50, not much at the 60, but the 76, which means if we will extend this one, it would be at the 60. So we are within the selling zone of dollar yen too. Yeah, we are within the selling zone on dollar yen too, between 110.20, which is yesterday, and 110.09, which is right around here. So I'm going to keep it also in mind today and see if we will be able to trade or do anything new. All right, let's just check the performance just real quick. It will be nothing much. Oh, yeah, I mean that's very fine. All right, British pound also, we looked at it, and so we have a little less than ZAR. Oh my God. Let's see, ZAR. I mean, I don't trade ZAR, but I can just. Why would you trade something like this, to be honest? I mean, da, da, da. We had a look at it. Are you the same guy who was short at some point, I guess? I'm not sure. Anyway, we have like 4 minutes left, but I would definitely not buy it here. I really need to see some sort of retracement too. I can't buy it here. Um, British pound, as I said, we're hoping that we can see like over 139 today. So that's what we're hoping for, at least for the time being. ZAR, I really have no comment on it too. No. But it's almost like just like the ZAR too. Same thing. Same thing. Buying it here is not bad idea, to be honest here. Not bad, but not great. I would still need to see some sort of like another retracement to the downside. At least maybe just to test 870 something. That would be something to look at. What is your expectation about the Fed? I don't think so. They're going to do anything today, but at least when it comes to all the QE and the discount and the Fed fund rate. But what I think is there will be just very, very patient for a very important reason. I was in the States I just came back 2 days ago, and the infection rate is actually, I don't know, it's very terrifying. The people there are not using masks, and I've been using my mask, and people were looking at me as if as something wrong's happening. So I believe that the Fed already believes that the infection will spread even more. And that's why the Federal Reserve will be, I guess, the Federal Reserve will be very patient. So I don't think so that we'll see that much from the dollar today. I think it's going to be against the dollar, but let's wait and see. We have less than a minute ago. What time is it? Yeah, we have 1 minute left. So we'll see what the Federal Reserve is going to do, and we'll see what we can do. So well, I'm gonna just leave the news headline open, and I'm just gonna keep that FOMC, and you should be able to read the news once they come out. But we will read the news, we'll wait, and then we'll see what we will do. All right. So well, I'm just gonna be on the mic just in a few more minutes, and then we'll start seeing what the Federal Reserve is going to do. There's no interest rate change. It's not about the interest rate, as I said. They're unlikely to do any kind of change in rates anytime soon. But we'll have to wait and see what the Fed's going to say about QE, Corona. There we go. So the economy has made progress towards goal laid out to taper. So that's one good thing for the dollar. Establishes domestic and foreign standing repo facilities. Also, inflation has risen, largely reflected MBS every month. Buying the same, hardest hit sectors in pandemic not fully recovered. Holds rates unchanged. All the votes are unanimous. So here is the catch. The economy has made progress, goals driving economy remains. Don't react to the numbers again, as I said. You don't need to react to the numbers yet. Fed continue to assess the incoming meetings and yeah, that's kind of an excessive move here. So first of all, you don't need to react to that kind of data. Just one moment, and I'll be with you. I'll just keep on reading what is happening here, and we will look. So that's the full statement of the Federal Reserve. If you look at on the screen, and I would not be interested to react to these data, or to the statement anyway. So here's what the Fed basically said. So the most important thing is that the economy has made progress towards goal laid out to taper. So there is some sort of a progress, but we're not there yet, that's why I don't think so. This kind of move will continue for that much. Fed establishes domestic. Or what do we do? Why this one? Let's do just the Fed. All right. Yeah, I wouldn't be actually doing that much of a reaction to these kind of moves, at least for the time being. Silver went down. Even let's say just have a look at U.S. equities real quick because we're not seeing that much of a move so far. Dow Jones is still down by 110 points. S&P is still 5, and even Nasdaq we didn't see that much of a move. Even currencies, if you look at it, we just dumped just a little bit, not too much. So I'm not really interested in kind of like chasing move to the downside. We might actually go into buying some currencies here. So let's have a look and wait 1 second. Press conference is going to be in 30 minutes, just so you know. So there's no need for the time being. It's not that big of a change, by the way. I don't know, where did I do? Oh, yeah. Yeah, so that's, I mean, it doesn't look like we have that big of, okay, let's do G2 and have a look at some currencies here. It's not that big move yet. I mean, I don't see any that big of a move so far. So let's go ahead and do Euro first because not IR. Why am I unable to type? There we go. That's not that huge move that we saw anyway. I would still consider, to be honest, like to buy, not to short. I don't think so. This move is going to continue for a long, long time. With that being said, ladies and gentlemen, let's go first with, and that's what I like, Dolly Yen. I'm going to also actually go in right away And I am going to short. First thing, let's go ahead and dive with dollar yen. All right. I would go with dollar yen first. Short dollar yen at market right here. Where is it? Where is it? Where is it? Damn, man. I'm going to short dollar yen to start the party. And it's going to be just a first initial. Oh, there you go. All right. That is going to be right here. What time? What is it? All right. That's the first one. That is the first one at 1:10:21. I'm going to post it on the screen as well so you guys are able to see it. But that's our first trade for the time being. Dollar yen to short at 1:10:20. That is the first thing. So let me just get that news out, and that's the first one. All right. That's the first one for the time being. For the time being. Well, that's initial because we might able to add to this position later. So just keep that in mind. All right. If it goes against us, we might actually average to it. All right. Let's see. What do we have? I'm just gonna need a few seconds, and I will be right with you. But for the time being, that's our first. That is our first trade for the time being. I'll let you know about this at 10:20. We might add again at 10:40 if it goes there. So keep that in mind. All right. 'Cause I'm just gonna post the trade in a few moments. All right. $55. All right. That's it for the time being. Right. Okay, well, let me go back to some of your questions first, and then we'll talk about it. USD has a positive news, long dollar yen. I mean, so, okay, hold on. Let me just read one by one. Tapering again, and in a few days later, a little bit early to talk about it. Yes, dollar yen looks like going to strong resistance. All right. Okay, I'm just gonna read a little bit and then we'll see what we do. Uh, Euro, JPY. Oh, not euro yen. Hold on. Euro sterling. It is already strong support since the morning. Uh, don't see that much of already. So far, 129. Why I need to see some sort of another push later. Anyway, nothing much on dollar yen so far. What is your stop loss? So the stop loss is on the screen right now. 110.20. My stop loss is 110.55. But if it goes to 110.40, I'll be at again. So let me add this. Um, I'm gonna add this one too. USD JPY pending. Ordered to short once again at 110.40 if it goes there. All right, there you go. I already also posted on the screen. US 10-year yields are doing nothing much really. What was it? USGG 10. I wouldn't say it's a positive news because again, like the move is not that much of excessive. I don't think so. It's something new because when the Fed is saying like, "Oh, we made some progress toward tapering, but we're not there yet," so I don't think so. It's going to be any. That's what I think. I mean, you might be right too, but so far we're 1 pip in profit. So we'll see what we do. Anyway, how about the long or short? Also, sterling. Actually, sterling is not bad, but I mean, again, like I'm already long sterling from 37. I just want something over 39. I mean, if you're gonna buy a sterling here, it's been going up for 2, 3 days now. But if you're gonna buy it, your stop should not exceed today's low, which is 13.44. If you're gonna do that, but for the time being, I'm just gonna stick with dollar yen. And here we go, 14 dollar yen. That's not bad. That's not bad. Gold over 1800 one more time. Silver recovered. Everything has actually changed right after. So it's manipulation, not positive news. There's no change in interest rate. All right, okay. What trades do we open? As I said, it's dollar yen for now. What impact does the interest rates have on the dollar since it did not change? As we already said, there's no change from the Fed. I don't think so. The dollar will keep on jumping higher. And right now, we're seeing some sort of look at this one for real. I'm just gonna take you to have a look at the euro just real quick for that big reversal that we saw just right now. I mean, look at that. Look at this beauty. So, dollar yen, we're already 7 pips in. And the euro is over 18 again. British pound over 38.80. Yeah, so I would like to stick to what I think is right, which is, I believe, is dollar yen. Dollar yen is at 110.10 already. We're 10 in. We're 10, 10 pips in profit. Gold is back above 1800. I'm loving gold to be honest right now. So I'm sticking to dollar yen for the time being. That's my best bet, at least for now. At the same time, if you want to add any to any of the trades or any currency, including the euro, British pound, Aussie, Kiwi, whatever, if you want to buy them, you can, but your stop should not exceed today's low. But for the time being, I'm just betting a lot on dollar yen to go back down below at least 109.80. So that's my take for the time being. referendum on Constitution. Yeah, I mean, we'll have to wait and see what happens next. All right. The press conference will be up in a little bit, in 15 minutes. YouTube, let me just look for the press conference because I really need to know if it's gonna work or no. Federal Reserve Life. Oh, there we go. We have a lot. I'm gonna just take that and just copy the video and then play it in our nice player on our stream. And then we'll just play it and see how it goes. We don't need to. All right, I'm just gonna go ahead. Which one? Yeah, that's what I thought, but maybe we will do something better than this one. Left side English, was it? Yeah, that might be better, I guess. And we just take that right, and we will just change it. All right, I think we are good to go. Or maybe do something better than this. There we go. That's even better, I guess. Okay. Main screen, camera. Yeah, I think we're good to go. And now we just do the left side. Yeah, this looks better, I guess. No? Okay, that would be the. And let me just make sure that we have sound coming in through. 1 second. Began. Virtual in. Yep. I think we're good. I think we are golden. Let me do one more thing just to make sure that we have everything set. Or we can do also try Yahoo Finance Live just for the sake of it. But so far, again, as I said, I'm just sticking to dollar yen, and that's what I'll be looking at for now. Just gonna try and do open file. I'm just trying to check if the sound will be okay. There we go. Another move. But let's wait. Hold on. I'm not sure why voice meter is not working now. Property. be serious now.
Curious to know what you are anticipating then for some
Yep.
of the performance that we have been seeing once some of that easy money starts to get pulled right off the table.
Yeah, that's a great question. I think that as you look at the monetary policy outlook and the fiscal policy outlook, it seems very likely that both are going to be pulling back on accommodations. So overall, that
All right. I
will
guess
earnings to a certain degree.
we have everything in place for the press conference. So I'm just gonna go back again and just making sure so we don't get stuck with any kind of technical issues before the. And here we go. Okay, we can just basically. All right, I guess we're ready for the press conference just in a few minutes, which is like in just like 10 minutes. But just wanted to make sure that we have everything set and without any kind of technical issues. So let's go back to your questions again and make sure. All right. What impact does? We talked about it. Gold rising, yes, it's still 1800. It's still not bad. I want to just have a look also at JPY one more time and see why I like dollar yen the most. Here we go. That's the one. The first time we saw the 50, the 60, and now here we go. We're already in profit with over like 11 pips so far. And as I said, whoever wants to do or whoever wants to buy any of the other currencies, including the euro, British pound, Japanese yen, whatever, or not Japanese yen, dollar CAD, it's not far by also for a short. Even gold, if you want to buy gold today, 1794, your stop loss should not exceed today's low. All right, that's again what we think is going to happen, and I hope that it keeps actually going uh, in our direction. But that's the only thing I'm going to add to, because again, as I said, we have already the euro, we have the British pound from this week and last week trades. We have gold on short and medium term, so there's nothing much I can add here. So I just decided to add dollar yen. Now dollar yen is 110.08, and yeah, let's go ahead and just real quick go in currencies. It is 08, 09 dollar yen, and for the time being, it's not that big of a move that we saw already. But I'm still interested in seeing what or where dollar yen is going to end the day today. All right, even if we look at, let's go ahead and look at U.S. equities. Already today, we're still kind of like Dow Jones is just like trimming some of the um, trimming some of the losses. S&P is still down by 5 points. Some people are asking to celebrate. I mean, let's get to 110, so that would be like full 20 pips, and then I promise we will celebrate. Hopefully, we'll celebrate. All right. What do you think about British pound at the moment? As I just said, I mean, I would love to see British pound over 39 today. If you would like to buy, again, your stop should not exceed today's low. But again, as I have like British pound, I have the euro from previous week and last week and this week, and gold. I stick with dollar yen for the time being. For the celebration, we'll do that later. British pound, again, I am saying this over and over. You guys asking for a celebration, but that would be an early, very early celebration. It's only 10 pips. It's not that big of a deal. Hey, the British pound is also the same. I mean, look at the candle, 15 minutes. That's kind of like a huge big shadow. So gold, I would love to see 1850, but we'll actually go there. I hope so. But today, maybe we'll go back to 1810. but we need some sort of a help from our friend Jerome Powell. So anyway, okay, if we get there's too much celebration calls today. So let's just wait for another low maybe, and then we will celebrate. So we'll see how it goes. All right, 6 minutes until the U.S. Or the Federal Reserve decision, and nothing much really happening. I mean, everything just went back to where it was before the decision. So that again gives you some sort of information. Oh, sorry about that. No, 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 no. I'm so sorry about that. We should not. I shouldn't have done that. But anyway, sorry. We have a missing bag since we came back from the States, which is weird. But anyway, it was just quick. All right. Any other questions? Anything that you would like to talk about? But beside the celebration, because it was just only 10 pips so far. So we shall see. Dollar CAD is kind of. Let's see. I mean, there. Why did I do that? Look at that shadow. Same thing. Um, I mean, it's not giving us much. I'd love to see another like further declines. On the daily chart, I still think that we're gonna go to 24. Uh, Especially that uh, we tried to break above the 200-day multiple times, failed to do so. Um, a double top on the RSI indicator, so multiple stuff doesn't actually look very good. So I mean, even dollar CAD today, if you wanna go ahead and short, your stop should not exceed 26.05. That's what I think. Gold facing heavy resistance 1810, 1815, so possibly make one more swing then sell. Well, let's see. But don't forget, I mean, gold is still benefiting from what is it called? Fundamentals more. It's not about just the Fed. It's about what's happening in China. It's about what is happening also inflation, bond market, stocks. What about S&P? Would it come down as it is all-time high? That's a tricky question, but let's go. Oh. Did they actually start? No. Well, the last one was just about like 3% lower. RSI still giving some sort of. I mean, I hope to see some sort of retracement, which might go like 4,330. That would be something to look at. All right, since we promised you guys with an early celebration, here's another low in dollar yen, which is what is it? Which is 1007. So that what brings us 13 points, 13 pips. There you go. You deserve it. Here's the euro going all the way above 18.15 right now. That's a pretty interesting thing to see. Yeah, that'll carry me as long as we have. He's an 08. All right, so we did well with the celebration. So that's good. Is sterling, is dollar. Everything is just going back again to where it was. Look, dollar CAD is now another new low. So that's what I say usually. What I mean by do not just react to the data or do not react to the initial move. It's always tricky. The initial move, it doesn't always give you the the right direction or um, uh, doesn't mean that the trend has changed, so let's go ahead and start. No, uh, it's just basically uh, that you need to read what the Federal Reserve actually said. So anyway, the Federal Reserve is about to start. So I'm just going to head to the right now. They should actually start in a moment. I guess, I mean, this time they're doing it. Yeah. Okay. We'll just listen to Jerome Powell and then we'll talk later.
These factors should wane in coming months, leading to strong gains in employment. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower-wage workers in the service sector and on African Americans and Hispanics. Inflation has increased notably and will likely remain elevated in coming months before moderating. As the economy continues to reopen and spending rebounds, we are seeing upward pressure on prices, particularly because supply bottlenecks in some sectors have limited how quickly production can respond in the near term. These bottleneck effects have been larger than anticipated, but as these transitory supply effects abate, inflation is expected to drop back toward our longer-run goal. Very low readings from early in the pandemic, as well as the pass-through of past increases in oil prices to consumer energy prices, also contribute to the increase, although these base effects and energy
The sound is working, no?
reopening the economy is unprecedented. as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints could continue to limit how quickly supply can adjust, raising the possibility that inflation could turn out to be higher and more persistent than we expect. Our new framework for monetary policy emphasizes the importance of having well-anchored inflation expectations, both to foster price stability and to enhance our ability to.
All right, we'll wait until he finishes, and then we'll give an update. But so far, there's nothing new.
Appear broadly consistent with our longer-run inflation goal of 2%. If we saw signs that the path of inflation or longer-term inflation expectations were moving materially and persistently beyond levels consistent with our goal, we'd be prepared to adjust the stance of policy. The effects of the pandemic on the economy have continued to diminish, but risks to the economic outlook remain. Progress on vaccinations has limited the spread of COVID-19. However, the pace of vaccinations has slowed, and the Delta strain of the virus is spreading quickly in some areas. Continued progress on vaccinations would support a return to more normal economic conditions. The Fed's policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As the committee reiterated in today's policy statement, with inflation having run persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation
so there is
expectations
some
remain
sort of an
well-anchored
update with
at
what he
2%.
said. I just don't want to.
We expect
I don't want to like just to take it like a little bit too much. But remember what we talked about before he started talking about the infection rate in the states. So the Federal Reserve is fully aware of how things are actually progressing in the states about the pandemic, and the infection rate is still high in some areas, including the Delta variant. So that is still something that the Fed would, keep an eye on. So let's wait and see how things progress, and we still have to listen to what he says. So let's just keep listening, and then we'll see what we do.
Our asset purchases have been a critical tool. They helped preserve financial stability and market functioning early in the pandemic, and since then have helped foster accommodative financial conditions to support the economy. At our meeting that concluded earlier today, the committee continued to discuss the progress made toward our goals since the committee adopted its asset purchase guidance last December. We also reviewed some considerations around how our asset purchases might be adjusted, including their pace and composition once economic conditions warrant a change. Participants expect that the economy will continue to move toward our standard of substantial further progress.
There you go. Another comment that he just said, like Treasuries, MBS purchases continue until progress made. The Federal Reserve reviewed considerations on how asset buyings will be adjusted. So they basically discussed how they will actually do that, or how they will taper. But at the same time, the timing on change of asset buying to depend on data. That is nothing new, all right? So we will have to wait and see the data, and then we'll talk about, but there's nothing solid that they have today to say, all right, we will do, or we'll give the market some information when this will happen. So even the knee-jerk of gold that you just talked about, Tanvir, was also short-lived. So dollar yen is still in profit. So let's wait and see, because I really need to listen to what he's saying.
To complete the recovery. Thank you. I look forward to your questions.
Thank you. Let's go to Steve.
All right, so that's it for the press conference. Now it's the questions from the journalist, which is going to be a little bit tricky also. And let's listen to Steve Leisman. He's a very good questionnaire. So let's listen to him first.
In the statement today, and if you could be more specific about what substantial further progress would look like, and if that would then lead you to an announcement of an actual reduction in the purchases of your assets. Thank you.
Great, thank you. So
that's a
more
tricky
detail
question.
on substantial further progress. So let's talk about the maximum employment part of that. As you know, with maximum employment, unlike with price stability, where we can target a number 2% on average, with maximum employment, there isn't a single number that we can target. We monitor a broad range of data about different aspects of the labor market. There's unemployment among different age groups and such. There's participation, there's wages, there's all kinds of flow data, and we look at all of it to try to arrive at a picture of what.
So that was kind of a tricky question from CNBC's commentator, who basically said that can you give us more information about what the numbers or what the data that you're targeting to say what's the substantial substantial progress that you're looking for. And then here, Jerome Powell just paused for a little bit and then started talking. It's not just unemployment. We're talking about full employment. We're talking about wages. We're talking about, and we can't just target single number for maximum employment. This is why we're seeing right now, look at the market, what we are actually happening. And dollar yen is 110.05. We're 15 pips. We're 15. Where is it? Hold on one second. Let me just check one more time just to make sure that you guys can hear me. Oh yeah, you should be. So we're some ways away from substantial progress. That's what he just said. So basically, again, there we go. Look at the market. Euro 1835. And here is dollar yen, full 20 pips for the day. And here is the celebration that you're looking for. All right. So I guess we did well so far. I mean, at least for the time being. All right. Going back to the press conference again.
Hello, can you hear me? Hello, can you hear me? I'm sorry.
Yes, we can hear you.
I apologize. I just to follow up on the question, I want to ask, is it correct to see this as the start of the advance notice process? Before a taper, and also, can you speak to how the recent surge in COVID factors into your thinking on the taper? Thanks.
So as you know, we're in a process now where what we said is that
there we go. We're breaking below 10.97. All right, I guess you guys need to do one thing right now, which is, first of all, you need to move the stop from 1040, or not 1040, sorry, 1055. I would move my stop to break even, and just to make sure I don't want to lose any money. And even if something happened and the market just decided to switch, whatever, I would be safe. So move USD JPY stop loss from 1.1055, sorry, not 1.1055 to entry at 1.111020. You have a risk-free trade now, guys. So whatever happens, now the worst case scenario here, that will not be losing money, and the best case scenario is open. All right. Okay, we'll get back to, I guess my job is done today. But anyway, we'll keep on listening to the press conference, and then we'll see what we do.
Dining out, traveling, some schools might not reopen. We may see economic effects from some of that, or it might weigh on the return to the labor market. Some people might choose. Again, we don't have a strong sense of how that might work out, so we'll just be monitoring it carefully.
Thank you. We'll go to Nick Timmeris at the Wall Street Journal.
Chair Powell, Nick Timmeros at the Wall Street Journal. In your opening statements in March and April, you noted that a transitory rise in inflation above 2% this year would not meet the threshold of moderately exceeding 2% for some time. And I noticed you didn't repeat that qualification last month or today. And so in your view, has the rise in inflation this year met the threshold of moderately exceeding 2% for some time?
That would again be a question for the committee, but I would really say the guidance that you're talking about is really the guidance to do with liftoff, right? That's what the guidance is for liftoff. We had to have labor market conditions consistent with full employment, inflation at 2% and on track to run moderately above 2% for some time. It really isn't relevant now. Because we're looking at tapering asset purchases. We're clearly a ways away from considering raising interest rates. It's not something that is on our radar screen right now. So when we get to that question, when we start to get to the question of liftoff, which we are not at all at now or near now, that's when we'll ask that question. That is when that will become a real question for us.
Great, thank you. Gina Smialek at the New York Times.
Hi, Chair Powell. Thank you for taking our questions. I wonder if you could talk a little bit about reacting. Does that affect how you're thinking about tapering? Does it affect how you're thinking about, potential liftoff down the road? And if you could just talk a little bit about that.
Gina, I'm sorry, for the first 15 seconds of your question, you froze. Could you say that again? I apologize.
Oh, yeah, no, sorry. So I was wondering if you could talk a little bit about how the divergence in global growth and the sort of multi-speed recovery we're seeing around the world impacts how the Fed thinks about its policies. So do you take into account that sort of multi-speed recovery when you're thinking about tapering QE, and do you take
Guys, I guess actually the day is done. I mean, I don't think so that we need to listen to the rest of the press conference, but we have to. I think we have to, because I don't know what's going to happen like in the next few minutes. But anyway, but he's still within the same, I guess, like we're not going to change anything. But there's a question here. Hello, sir. Please tell me why you chosen dollar yen over all the other currencies. Because again, I mean, I don't look at dollar yen that much, but when I see some Fibonacci levels on it first, and that's one thing which was, again, like it was a very good Fibonacci for me, at least for the past 3 days. We've been dropping down. We saw this kind of retracement with the Federal Reserve decision. That's what I looked at. And now we're saying we're over 25 pips in profit. And if we look at, let's say, the euro, I haven't seen like that much of Fibonacci levels on the euro for the past few days, because again, I mean, it's kind of like messy. So it's both like kind of technical and fundamentals at the same time. Even with the British pound, let's say. So now most of the currencies are actually reaching. Here's the 39 on the British pound. Finally, that's one thing that we were looking at. For the next few days, I wouldn't be surprised if everything actually reversed maybe tomorrow for this move, because I believe somewhere between 139.10 and 140, this is when I will be looking to short the British pound again, but not only on the short term, but on the medium term as well. So that's kind of, it's kind of like tricky, but as long as the COVID running, no one is finally safe. Yeah. Why not pick a risk pair against the dollar? I mean, you can still do that, definitely. But at the same time, as I said, we already have like positions from last week on the euro, on the British pound. We have positions on dollar CAD and the Aussie. Okay, that was like a week and a half ago, and even on gold. And all of these are actually in profit. So I didn't want to add more to my winning ones. So I just added a new what is it called? A new pair to my portfolio. Let's say, if that's the way. Anyway, 93, 92. Dollar yen is doing what he needs to do. I mean, right now we're almost in 30 pips, I guess, if I'm not mistaken. How much are we? 1 second. Let's see. Yeah, we're 23. I mean, anything between 25 to 30, it should be okay. So we're gonna go back to the press conference to listen to. But as I said, move your stop to break even, let it run maybe overnight, and then we'll see tomorrow what's gonna happen. So let's just keep that in mind.
Confidence, let's say, in the time.
But at the same time, don't get greedy. We already have like 25 pips in profit, so don't get too much greedy.
Risks to inflation are probably to the upside. I have some confidence in the medium term that inflation will move back down. Again, it's hard to say when that will be. I will say though that inflation is half of our mandate, price stability is half of our mandate, and if we were to see inflation moving up to levels persistently that were above, significantly, materially above our goal, and particularly if inflation.
Another thing to talk about here, even the U.S. equities also turning higher. So let's have a look at that real quick. S&P just down by 1 point. Even Dow Jones is just like 10 points lower. And let's have a look real quick. You know what? I think I missed dollar yen. Of course not. It's not okay to open a buy now. Definitely not. Why would you buy something at the session high? Of course it's not okay to buy it now while if it's already going up. We went short on dollar yen when it was rising, not the other way around. Try not to chase. Chasing would not be nice. Yeah, no, even this one, I wouldn't be taking it too. So we'll have to wait. Anyway, yeah. So we'll get back to the press conference one more time.
Been connected to some speculate connected to sentiment around the spread of the Delta variant and concern about growth. There was also some decline in inflation and compensation, which is significantly reversed. And there are also so-called technical factors, which is where you put things that you can't quite explain. So I don't see in any of that there is really anything that challenges the credibility of our framework, if that's really your question. We are committed to achieving 2% average inflation over time. What we said was that, in particular, when we see a very strong labor market, high levels of employment, low levels of unemployment, that won't be enough for us to raise interest rates until we see some inflation. Of course, what we have today is kind of the opposite. We've got 7 or 8 million people, fewer people at work than were at work before the pandemic. So we're a ways away from full maximum employment, but we have high inflation. So it's kind of the opposite case, and we have to deal with that. Any central bank has to deal with that by looking at the inflation and asking whether it is broad-based and likely to be persistent, and whether inflation expectations are implicated in a way that could cause them to rise. So we're monitoring that very carefully, and we're prepared to use our tools as appropriate. But again, I think our framework is pretty well understood, and I think the real test of it will be down the road when it's time to think about raising interest rates and how we assess that set of issues.
Thank you. We'll go to Rich at Bloomberg.
Thanks very much, Michelle. Chairman Powell, you just alluded to the fact that you're prepared to use your tools to slow the economy down if need be, if inflation looks like it's getting out of control. I want to just try to understand that in the context of the framework and the forward guidance. Does that mean you'd be prepared to raise interest rates even if we're not at maximum employment at that point? Should you see this danger of inflation? And two, does it also mean you'd be prepared to raise interest rates even if you are still buying assets?
هذا سؤال من بلومبرج، سؤال جيد. بيتحدث sorry we have to speak in English. This question is also very important question from Bloomberg, asking the Federal Reserve, like, let's say you didn't actually reach the goals and inflation kept on going higher. Are you at some point going to raise rates even if the numbers are not met and inflation kept going higher? So that's a tricky one.
Temporarily in different directions. We're not at full employment, but we are having high inflation. We feel like we're going to be making good progress over the course of the next couple of years, really, toward maximum employment. This is a very strong labor market. If you look at the number of job openings compared to the number of unemployed, we're clearly on a path to a very strong labor market with high participation, low unemployment, high employment, wages moving up across the spectrum. That's the path that we're on, and it shouldn't take that long in macroeconomic time to get there. So that's what I think is really the likely case. Again, it's not timely for us to be thinking about raising interest rates right now. What we're doing is we're looking at our asset purchases and judging what is right for the economy and judging how close we are to substantial further progress and then tapering after that. And then the question you ask about would we raise rates if we hadn't finished the taper, hypothetical question. We'd face the circumstance at the time. We could always just, one thing one could do would be to just cut asset purchases all the way to zero if you wanted to do that. But it's just hard. It's hard to answer what you would do without knowing a lot more about the situation. Ideally, you wouldn't be still buying assets and raising rates because, of course, you're adding accommodation by buying and removing accommodation by raising rates. So that wouldn't be ideal. I'll say that.
So that question also, they were asking about, will the Federal Reserve be able to raise interest rates without tapering, or what is it called? Without, even if they didn't reach the level of zero tapering? And he was like, well, ideally, no. Ideally, we wouldn't be buying assets and raising rates at the same time. We should stop buying in full to zero and then raise rates. So that's kind of like also another reason for the Federal Reserve to keep doing what it's doing right now. Paul was saying also unusual to have ratio of vaccines to unemployed this high. So that's still kind of, again, what he's saying basically, like in plain English, is like we have to wait and see, and we have to depend on the data. It's kind of almost the same thing that what Ben Bernanke said before even doing the tapering at the last at the final meeting for him, like being at the Fed. So gold is not doing much really. Anything else is just moving. You have the euro, British pound, like everything is actually moving except the dollar. That shouldn't be actually that much of a big surprise so far. And stocks, everything is just actually moving back higher. Even Tesla today, where are we? 645. Apple, now we should be seeing some sort of recovery. There we go. I mean, we're just right now all the way up. MSFT, SB. Oh, that's kind of a good one. HT, not bad. What was it else? I think that would be good. Gold for me is still a buy, but I mean, again, I have it already from 1770, 1780, and 1800 and 1795. All right, back to the press conference.
The Washington Post.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I wanted to follow up on what you said about there tending to be less in the way of economic implications from each wave of COVID cases. Could you elaborate on what you've seen to that end during previous waves? And then looking forward, how vulnerable is the labor market to the Delta variant? I'm thinking or wondering if you have concerns that jobs that may have come back in travel or tourism could be susceptible if people started reconsidering their travel plans, or if caretakers were suddenly faced with the prospect of schools not reopening. How do you see some of those risks going forward? Thank you so much.
Sure. So if you remember the summer wave last year of COVID, which was largely southern and western states, the economy just performed much better than anyone expected. You know, we were coming off the spring wave where there were a lot of shutdowns, and then this big second wave hit. And I think the natural thing to do is to expect that it would have a real impact on the economy. It was much less than people thought. People learned, what's happened is, first of all, many people are vaccinated, they're going on with their lives. Secondly, we've kind of learned to live with it. A lot of industries have kind of improvised their way around it, particularly, for example, buying a new home. That process of buying a new home very quickly moved to much more of a virtual process. And so they were able to, to do that. And other industries as well have gone to takeout and, no contact things. So that can all, it seems like we've learned to handle this. Now, I think people would like to get back to the way things were. And I hope to some extent we will over time. Of course, the big wave we had last winter did have significant employment effects, particularly in hospitality and leisure and other entertainment, other areas with a lot of direct contact. A lot of jobs were lost in that because that was a very strong wave that happened in the winter months last year, just before the vaccines arrived. So with Delta, we're just going to have to watch. Again, with a reasonably high percentage of the country vaccinated and the vaccine apparently being effective. We're not experts on this, but it seems like a good going in estimate would be that the effects will probably be less. There probably won't be significant lockdowns and things like that. But again, those are not decisions for us, or nor is it something we'd be expert in. In terms of the channels, this is kind of speculation, but it just is that people, you could imagine school districts deciding to wait a month or two for the Delta wave to quiet. I'm not saying this will happen, but that it's easy to imagine that. It's also easy to imagine that some people might say, you know what, I'm just gonna wait a couple of months before going back to work. Wouldn't be hard to imagine that happening. If schools don't open, then caretakers have to stay home, and if people don't go back into the labor force, then the job growth won't be as strong. Those kind of things. So it doesn't. Again, sitting here today, not being able to really know the future, it doesn't seem as though the effects will be very large, but there may be effects, and it may be that the effect is to slow the economy down just for a period of months, or not. There are many parts of the country where it might not have an effect, and we're just going to have to see what the economic effects are.
Thank you. Now we'll go to David Gura at NPR.
Thank you, Mr. Chairman. I was going to ask if you've started drafting your Jackson Hole speech, but I'm going to go in a different direction here. And Steve Leisman asked you about semantics, and I'm going to take a cue from him and ask you about the term transitory, because I think of you as somebody who so lucidly explained policies and programs in recent months and made a real concerted effort to explain them to the American public as a whole. I wonder about this term and what you would say to people who don't know it definitionally, don't know what it means, and see prices going up and wonder how long they're going to have to wait. So just some broader definition from you, I'd like to hear just about what it means or how you understand it. And quickly as well, you've talked about vaccines a bit, and your colleague in Minneapolis has placed a mandate on vaccinating employees coming back to that Federal Reserve Bank. And I wonder if that's something that you would like to see or expect to see system-wide going forward.
The concept of transitory is really this. It is that the increases will happen. We're not saying they will reverse. That's not what transitory means. It means that the increases in prices will happen. So there will be.
Yeah, so far there's nothing that's really a change. I guess the day is done. But I mean, we might see like another move just before the end of the US session. British pound, there's divergence. Where? What 1 hour. Let's look at the 1 hour. Maybe. But look at that one. I don't see like kind of a bearish too much here. And even on the daily, that is still shorting USD and buying stocks in GBP and AUD. Well, I mean, I have dollar yen, sterling, euro, Aussie, and gold. And buying stocks, yeah, I have like a lot of them. Last one is MGI. We'll keep going. Yep. So, all right, we'll back to the press conference once again and see what we do.
Happens because people's expectations about future inflation move up, and we don't think that's happening. There's no evidence that it's happening. All the evidence is that it's not happening. But nonetheless, we have to watch this very carefully because this is, we have two mandates: maximum employment and price stability. Price stability for us means inflation averaging 2% over time, and so we've got to be very careful about that. But I think it's a good point that it's a term. What it really means is temporary. But then you got to understand that it doesn't mean that the increases will be taken back. Some of them will be, but that's not really what it means. In terms of, so we're working virtually here, and we'll be coming back down the road in a couple of months, starting to bring people back here at the Board of Governors in Washington. And, we're going to follow public health guidance and things like that. We really haven't made the fundamental decisions about exactly what that will look like, and it'll depend to some extent on what CDC guidance looks like when we actually do bring people back in.
Thank you.
Thank you. We'll go to Michael McKee at Bloomberg TV.
Chairman, I wanted to ask you a little bit about your taper timeline, in the sense that you said you want a couple more months of data, and the statement says that the Fed is going to use to evaluate the developments in the two markets, in jobs and inflation, in coming meetings. Does that suggest that we wouldn't see anything before September or November in your meetings? And I know a lot of people on Wall Street have basically felt you're going to lay out your taper plans at Jackson Hole. Is that the plan, or are we not going to see anything until the fall?
So we made any decisions about the timing, and I did not. If I said we're looking at a couple more months of data, I'm not meaning to suggest anything about a particular time at which we might taper, because we really have not made that decision. All I'm saying is that we're not at substantial further progress. There's a range of views on what timing will be appropriate. And
Here's another question by one of the by one of Bloomberg's anchors, who actually asked him again about tapering, and he just keeps saying Fed has made no timing decision about the bond buying tapering. So again, I guess that is not going to help the dollar, at least for today or until the end of today's session, and we'll see what happens tomorrow. But it's found the King of Currency 2021 too strong. All right.
And we expect that if things go well, then we will reach that goal. And when we reach it, and the committee is comfortable that we have reached it, then we'll taper at that point. There's nothing I can say about Jackson Hole. We're in the process of writing that speech, and I am going to give a speech, and but I wouldn't want to say what'll be in there at this point.
Well, if I could follow up. Several people have recently noted that the Fed has got the markets working well, and you've got bank loans up. In other words, you've stimulated demand, but savers and companies like insurance companies and pension funds are getting hammered by the low rates, and they're wondering if the balance hasn't started to shift.
I would still wait
from
on
benefiting the economy to doing more harm than good.
Asset purchases were just a key part of our response to the critical phase.
I would still wait actually on shorting dollar yen, dollars, sterling dollar, sorry, or the pound. Anything at least for the time being is still looking good.
A big part of creating accommodative financial conditions to support demand. They were strongly needed. It was that commitment to continue asset purchases that provided strong support for the economy.
Well, adjusting, when they say adjusting, I mean, they're talking about tapering, or they're talking about like, which should be positive for the dollar.
About it right now, and meeting by meeting, and moving in that direction. We will taper when we reach that goal, and we'll provide more, more clarity on that as we go, as is appropriate.
Thank you. We'll go to Hannah Lang at the American Banker.
Hi, you've been asked a lot previously if the Fed's monetary policy at all contributes to inequality, but I was really curious to know where you think the Fed's regulatory policy lands, particularly if you think that the Fed's bank capital requirements have had the effect of penalizing lower income households seeking loans. Basically, is it possible to achieve the balance of a safe banking system with one that also provides
Oh, sorry about that. You're too smart. You already make a mind before FOMC to short dollar yen because of Fib support. I mean, there was a resistance, but anyway. The thing is, basically, I mean, it's not about that. It's about like reading everything before you go into that kind of like news coming out. Whether you're talking about the Fed decision, or I guess the sound is back. I guess it should be. It should be back. Yeah. Before you go to that kind of news, you have to look at the charts, look at technicals, what's good, what's bad, what's not working, what's working, or what kind of like patterns. And at the same time, you just wait for and evaluate everything that is happening. So remember when we talked about delta, and that might be one of the things that the Federal Reserve will talk about, which actually this is what happened. I mean, I was there in the States just a few days ago, and at the first few days, it was like kind of as if I'm a clown walking the street with a mask, and people. I mean, even like in one of the places, there were. I just had my mask on, and I just went to checkout, and the cashier was like, "Sir, are you okay?" And I was like, "Yeah, I'm fine." I mean, it was like, "No, you just still have your mask on." And I was like, "Yeah, because there's COVID." And he was like, "Nah, COVID is not here anymore." And where I was staying has the highest infection rate of the Delta variant. So that was weird to see. But at the same time, about the Fed and everything that happened today, you just need to read what basically the Federal Reserve just said, that we're just going to wait. With Delta, we'll have to wait. No new timing about when the Federal Reserve will taper, or even if they will ever taper right now, or like even this year. So that's kind of a balance. So you look at the charts, you look at fundamentals, you look at technicals, and then you just make up your mind. You don't. And when we went short, I mean, look at the high. What's the high of dollar yen today? The high is 110 spot 28. We sold, or we went short at 110.20. So we went short 8 pips below the high. And some questions just came back, like, again, like, do we buy the British pound here? It's on the high. Why would you actually buy something that is already up? So that's how I look at it. All right, back to the press conference.
To see is these other things. Do the prices flatten out? Do they actually move down? If they flatten out, then their contribution to inflation becomes zero over time. So they're not contributing to inflation. And so if we start to see those things happen fairly widely among the things that have really moved up quickly, then they won't all happen at once or happen quickly, but we'll know that our basic understanding of the situation is broadly correct. And I don't think it will take, what I said was, I don't think it'll take a very long time to see whether that's the case. It is probably the case that, frankly, the overall reopening of the economy is going to play out over a period of time. This is a world historical event that the global economy is now reopening. It's not going to happen quickly. It's going to take some time, and it's going to be very uneven, as we discussed before. But I think we will know, when we know. But I don't think it will take that long. I don't want to put a number on it. But I do think that if we see those things happening, we'll know that we have the story basically right.
Thank you. We'll go to Brian Chung at Yahoo Finance.
Sure. Hi, Chairman Powell. Brian Chung, Yahoo Finance.
Another thing just came out right now. California recommends indoor masking in all public settings. So kind of the states is going back to where they were before, but I mean, they're always talking about their, that's freedom stuff and sorry. Yeah, looks like things are not doing well in the States, and I've seen this already when I was there. So I don't know how things are going to be in the next few, in the next few days or the next few weeks, but I don't know. I think we did the right decision already. I mean, we got 20 pips, at least 25 pips so far, so that's better than nothing because nothing else is moving much. Okay. What time is it where you are, Nour? It's now 11:15 p.m. I'm currently in the UAE. I'm back to Abu Dhabi. Noordin, what do you think will be the re-entry on dollar yen? If you missed it, I don't know, but it's at least you need to go 110 spot 10. At least. Not before that, I don't think so. And don't short here, June 17. Just be careful. All right, back to the press conference before it ends, and then we'll close the party soon.
Due for market trading conditions, and also kind of in a semi-related point, the reverse repo numbers have just gotten even bigger since you raised the reverse repo rate at the last Fed meeting. And are you concerned to see nearly $1 trillion a day pouring in through that facility?
So, on the standing repo facility, what is it going to do? So, it really is a backstop. So it's set at 25 basis points, so out of the money, and it's there to help address pressures in money markets that could impede the effective implementation of monetary policy. So really, it's to support the functioning of monetary policy and its effectiveness. That's the purpose of it, and it's set up with that purpose in mind. Your question on the RRP. So we think it's doing what it's supposed to do, what we expect of it to do, which is to help provide a floor for money market rates and help ensure that the federal funds rate stays within the target range. It's essentially what's happening is that it just results in a lower aggregate amount of Federal Reserve liabilities that are in banks in the form of reserves and a higher amount of Federal Reserve liabilities in money market funds in the form of overnight RRP balances. So that's all that's really happening there. And we expect it to be high for some time. It's being driven, of course, by the relatively lower quantity of treasury bills and also the onset of the debt ceiling and the decline in the TGA, things like that.
I mean, it gets harder, but at the same time, if you know your risk, it gets much easier. Like by the time, uh, when it gets, I mean, 1 second. I guess there's something happened. No, it did not. I guess we're all good. Um, it gets harder if you basically don't know what's your risk, and this is when actually like things gets like hard, and at the same time you start, you know, revenge trading and stuff. But no, as long as you know your risk, it shouldn't be hard, even with millions, because you already know what your risk is. If you stick to your rules, it would be easy. If you try to change your rules, that would be bad on both short, medium, long term. Um, all right. What else? Hello, everyone. Hi, welcome. Euro, nothing really new. Like we're almost at the high, so there's nothing much really. No one asked question related to BTC means plans for stopping money laundering. What? I mean, about Bitcoin, the whole thing is kind of questionable. I like the technology, but not the asset itself, because now we're back above like 40,000, but still. TP on dollar yen. I mean, as I said, anything over 30 pips a day, I'm more than happy with the FX market. 30 pips should be more than enough. That's what I believe. If you believe I'm wrong, that's totally fine. British pound is the same thing. As I said, like again, if you read the all the technical reports that were sent out, like just few last week, yesterday, the week before, and everything. I mean, we were already long 137, so that's why I didn't add even to the euro or even to dollar CAD. We're almost at 25. We're looking at 124. So we're just basically right now just watching. Nothing much really I'm doing. That's why I just added dollar yen only, and it was like technically very nice. So nothing much really to add. That's not a change of trend. The whole thing that is happening right now is just like a short-term retracement to the downside in the dollar index. There is not a change of trend. Let me tell you something. DXY one more time. That is not a change of a trend. Whatever is happening right now, this is just a short-term retracement. So what I'm looking at is basically the dollar already broke. It's like downside trend multiple times, at least for this one, and this was just because what the Federal Reserve said back in June in the recent decision when they started saying, yeah, we might be starting to talk about tapering, and tapering might be like coming very soon and so on. So the market will start. What is it called? The market is already starting to price in the tapering in advance. And this is exactly what happened back in 2011 and when the Federal Reserve started talking about tapering. But when the actual decision happened, the dollar went down. So from now until then, the dollar is likely to gain more and more attraction. Excuse me. But from now until then, we will see some sort of a retracement to the downside. I don't think this is going to be like that huge of a retracement. And if we're going to look at it with like Fibonacci from recent low to recent highs, anything over like 91.30, 91 to 91.30, I think that's a very good area to start buying dollar, not only on the short term, but on the medium term. Apple to again require masks to most stores for buyers. So there you go. States are starting to get in a bad situation again. All right. So the same thing goes for the euro, for the British pound. Everything is happening right now is a short-term play. And here is another low in dollar yen. So whatever you guys want to do with dollar yen, go ahead, be my guest. My job is done for the day, I guess. All right, back to the press conference again.
a way that is hard for companies to manage and puts them in a situation where they have to accept substantially lower margins or raise prices. Now, when it happens gradually, if we've seen in a long expansion, sometimes unit labor costs do move up and put some pressure on margins. In a long expansion, that's been happening late in the expansion. That's not a problem either. The problem is if it happens in a way that pushes firms broadly into raising prices. It was called the wage price spiral. We don't see that now. This is something that was a feature of the high inflationary era of the Great Inflation, but it's not a feature now, and we don't see that now. Of course, we'll be watching it, and this is one of the reasons why we're watching so carefully to see whether labor force, whether people do come back in and accept jobs. Given the very large number of job openings and the very large number of unemployed people, we'd like to see, some matching going on there so people get back to work. We think labor supply would be a healthy thing. But wages moving up across the spectrum, consistent with inflation and productivity, is a good thing.
Thank you, Chair Powell, and thank you all for coming.
Thanks very much.
So this is it for the day. The press conference has ended. One thing that I'm actually looking at right now is Dow Jones is kind of taking a nosedive one more time, and this is as Jerome Powell just finishes his press conference. But nothing has really changed. The euro at the high 1840. The British pound is at the high 1904. That's pretty good. Dollar yen almost at the low. And I guess we are just going to end our live streaming with no additional trades. It was just only one trade, and that's, again, because that's what I thought that is suitable for us today, or at least from my side. All right, something safe, easy, small, and kind of quick, I guess. It wasn't that big of a trade. Yes, you think it's a 25, it's a small amount. It might be a small amount, but at the same time, small amounts adds up every day. And if you can do that in consistency, and you know your risk, this is when you feel, or this is when you getting better and better. So, give me a news portal to be updated always as fast as possible. Well, I mean, you have a lot. I mean, just Google it. It's not that big of a deal. But you have you have Bloomberg, you have CNBC, you have, those are the main ones, I guess. That is always Reuters, multiples. Okay, press conference is done, yep, I guess that's the one. British pound, same thing. I'm looking again. I am looking between 140. In the next week, probably next week, not this week. I'm just going to be looking for buying the dollar, maybe in a week or two, if we see that kind of the retracement that I'm looking for, because I think we are getting very close to the time when the market will start price again QE tapering. So that's what it is. Dollar yen, as I said, take profit. I'm going to leave it to you guys. You can just what I am going to do. I already moved my stop to break even, and I'm just going to leave it until tomorrow morning and see where dollar yen is gonna head. But just put your stops at break even, and or you can do a traveling stop for 30 pips or 40 pips and let it run. That's what I believe. Why gold didn't get much high? I mean, we're still slightly higher, $5 today up, so it's not that bad. But I think most of the move will be during the Asian session and the European session when they open tomorrow. So yeah, you don't always get what you wish for, right? That's what they say. All right, I guess that would be it for the day. Here's dollar yen at 93. Nothing much really is happening here. Yep, I guess that'll be it for us today. Let's just have a look. I mean, I can just leave also the screen up for just the information if you guys want, and without a camera maybe. That should work too. Yeah, here's gold going up. I mean, everything now is just going for new levels right before the end of the U.S. session, so that makes sense. Dollar yen. And I would love to see dollar yen tomorrow breaking below that 109.50, or if you get 109.60, that would be amazing. The daily is another reason why to keep these. So we should be good to go. There we go. Look at that Fibonacci. Yeah, I think we did well. Stay dehydrated until tomorrow, and then we'll see what we can do. All right. Here's gold, and here's another celebration for what we did today, even though it's just only 30 pips, but it's worth the celebration maybe. All right. Anyway, we'll just end the stream in like 5 minutes from now, or I can just leave it also until midnight, like in just few more, another 30 minutes. If you have any questions, let me know. Any long trade? Definitely no. The market is already at the high. Why would you buy? I'm still short dollar yen, and that's what I'm gonna keep an eye on for the next few days, or maybe not a few days, but we're already into like almost 30 pips now. So, all right. Thank you all for coming. I'm just gonna keep the stream on without a camera, just this chart until until the end of session, which is going to be in 30 minutes. All right. Thank you all for coming. I'll see you. You can just contact me through Twitter, that's my Twitter handle. You can guys just tag me there. Yeah, you can tag me there or do whatever you want and just ask any of your questions. All right. Thank you all for coming, and I'll see you once again in another day.